The sucky part for us in this business and for everybody listening there is if we had the correct information at the time that report came out, you would have seen rates decline.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Fed Reserve meeting. So they just had the meeting. They didn't change the rates, but there was dissent.
Yes.
What does that mean?
Tell me
about that.
Two of the voting members said we disagree or we believe that we should be cutting the rates. So we had two members, which is very unusual for the Fed.
So it's the first time happened in a long time.
Yeah, over 20 years.
Yeah.
So that shows that there's sort of this building tension on the Federal Reserve Board for, impetus to begin dropping the rates.
Okay.
What was very interesting about that is the Fed came out on last Thursday saying, okay, we're going to leave the rates the same. The very next day, a big report dropped. And this was the jobs report coming out of the BLS, the Bureau of Labor and Statistics.
Right.
This report showed a significant softening in the amount of jobs being created. It came in notably less than what was expected.
Okay.
Came in at like 73,000 jobs. By the way, those 73,000 jobs were all in healthcare. That's where the jobs were created.
Okay.
All the other sectors were flat to down.
Okay.
So that's an interesting appeal about there. But in addition to that, the big sort of additional hammer that was put on the market was they revised the previous 2 months' numbers.
Yeah.
And what they basically did, if you kind of play this out, is they took them from what they said initially was, hey, we made 125,000 jobs this month, right? To down to up 14,000 or 19,000, depending on the month.
Oh, wow.
So basically all the jobs they thought were created went away. We're not really
not really created.
The sucky part for us in this business and for everybody listening there is if we had the correct information at the time that report came out, you would have seen rates decline.
Yeah.
Because we can see that the U.S. economy is slowing down.
It's kind of what the Fed was looking for.
The Fed needs to see that in order to react. At least that's their stance at this point.
Right.
And so this report ended up being a milestone for us. So on Friday, you had rates improve about 0.25% in that one day. Boom.
Yeah.
You saw 0.25% go away because sort of Wall Street and the markets are saying, okay, they certainly need to cut at the next meeting. Right.
Okay,
so they're anticipating what the future is. That's what the stock market does as well as the bond market.
Right. Right.
And so this was, it was news we had the day before, would have been very, very helpful for the Fed to be able to cut at this last meeting.
Yeah.
Right now we're scheduled, the next meeting is September.
Okay.
We have a big Fed event called Jackson Hole that actually happens in August where all these financial dignitaries of nations from around the world come together and they have this big meeting in Jackson Hole, Wyoming. But normally the Fed doesn't actually make changes at that. They could. They can do an off-meeting cut, but that's not anticipated. We think it's going to be a cut in September at this point.
Okay.
And if this data continues, we have 2 more jobs report like this between now and the next Fed meeting. If they continue to tell this story that the economy is significantly softer than what we've been thinking, that cut's going to happen.
Yeah. Okay. All right. Good.
So big stuff.
Interesting. I mean, really, those statistics are so critical for projections. I mean, that's what we're thinking. That mortgage companies, bonds, all these people, they're thinking about, okay, what's happening? I need to get ahead of it. I want to stay in front of it. So they count on that data a lot.
The whole world economy is functioning off this base interest rate that the U.S. sets, right?
Yeah.
And if the data coming in is not accurate and we end up having the wrong rate set, that costs everybody money.